Reading price charts, bar by bar, the technical analysis of price action for the serious trader. Chapter 13, daily, weekly, and monthly charts. Table of contents, huge volume reversals. Huge volume reversals. When a stock has a big gap and the volume is 5 to 10 times larger than usual, this could be a sign of a bottom or a top. Traders should always let the price action tell them if the market is reversing rather than looking for reversals on big gap days. Oftentimes, if there is a huge volume of a reversal, this could lead to a swing that lasts several days. Here, we have a gap up and then reversed. The bears had a strong break through both EMAs, and then we had a pullback. We went sideways for about a week, and then the bears got another breakout, and the trend got sharper. This all started up with a gap up on the 4th. Here is a gap down. This chart is the 45-minute chart, and we're looking at this bar. Bears are trending lower for a few days, and then there's the gap down, and the bulls reverse up. This is a high volume day. You can see that it took place on the 13th. This is that same chart zoomed out from the 13th of March to August, which is around today. You can see how long we've been in a bull trend after this huge gap down, high volume, and reversal. This is the end of chapter 13. Please leave any questions in the comments and I will try my best to answer them. Thank you for your time, and if you learned anything, please consider subscribing. This was a very short chapter, but it was also short within the book.